and welcome. You're watching this special conversation on ET Now. I'm Anisha Jain. Well, we're right here in Kolkata at the corporate headquarters of a conglomerate that spans from power to chemicals, IT to retail, music, sports, lifestyle, and a lot more. In fact, the stock of some of these group companies have soared anywhere between 50 to 100% over the last few months itself. And that's the magic that happens when wisdom and experience blends with fresh blood and vigor. And that's exactly the inflection point that the RPSG Goenka Group is at right now. And to talk to me about just that, I have with me Dr. Sanjeev Goenka, the chairman of the group, as well as Shashwat Goenka, the vice chairman. Thank you, gentlemen, for making time and speaking with us.
Our pleasure.
But tell me about it, Shashwat. How does it feel? Because I understand this is the first time you guys are doing this interview together. Are you nervous? Is it par for the course every day in terms of the business?
I mean, we talk a lot about business every day, so I think that part is pretty normal. And I think, yes, this is our first interview together, so it should be fun.
But would you have said the same thing if I would have asked you what you would have felt back in 2011, 2012 when you joined the business? And I ask you that because while being part of the owner's family, of course, comes with that much privilege, but there's that added pressure of performance and that pressure to succeed. How did you deal with that?
No, absolutely. I think you know, with the background that we come from, there comes, of course, a huge legacy and a huge responsibility that comes with it. And I think you could say that pressure is there, but at some level, I think that pressure is innate. So it doesn't really, you know, it doesn't really feel like any extra pressure. It's just something that you know you need to do. You need to grow that legacy.
Okay, you need to grow that legacy. But let me ask you this, Dr. Goenka. Would you have hired a fresh graduate, 21, 22-year-old out of University of Pennsylvania if it was not for Shashwat? What quality really strikes out to you from his business acumen?
He's very deeply analytical. He's very methodical, meticulous. And he's a deep thinker. So he adds a lot to me. And over the years, I think he's gained in confidence and his ability to take tough decisions. And it always helps when you're two rather than just one.
That's true, and that's perhaps something that I'm curious about and intrigued about. How does the power dynamics work out when you are working together in the sense? Is it more of a yes-yes kind of environment, or are there disagreements that reach the dinner table as well?
We agree to disagree, we disagree to agree. I mean, it works every which way.
Always. Yeah. All the permutation combinations come together.
It just works every which way. But having said that, at the end of the day, the way we structure it is that it is merit which wins. So either you convince me or get convinced. So, you know, it's pretty much that way. And it's worked very well for us.
Clearly it has. He clearly has high praises for you. But if I had to ask you if there's one trait that you would want altered in your father, does something come to mind? Let me play the devil's advocate here.
I think one of the things that's great, and I definitely don't want altered, is the fact that we've always been allowed to speak our mind growing up and even now at work. So I think that's something I'd like to keep. And I think something that I'd like to change would be him allowing me to take some more free time.
So you don't allow him the free time. Is that a complaint? Please allow me some more leave days. But I think with the kind of pressure that you have and the business growing, that's difficult, at least for the near term, and you'll have to deal with that pressure.
Absolutely.
But Dr. Goenka, I wanted your sense as to where India stands today. If I had to give you an option that you could start your business journey right now versus, let's say, decades ago, would you choose to start now? Or would you choose that time? Because right now there are a lot more disruptions, but there's also ease of doing business.
You know, it frankly doesn't matter when you started. If you've started earlier, you have a head start. To start now is a great time. Actually, it's a great time to work in India.
Yeah.
And it's not been better in the past, ever. So I think it's just great doing business in India. And those of us who've been around for a while have certain advantages. Those who are starting afresh also have advantages in as much as they don't have any issues of the past.
True.
So it works both ways. At the end of the day, it's your performance today that counts.
Yeah, and they're very analytical about it, the audience, the viewers about it. There is no leeway there, which was perhaps there earlier. But what else do you guys bond over apart from work? Because he says that you guys talk business all the time, but what else?
We have a system, and this was a system that my parents had laid out, that in the evening, the whole family is together for about an hour.
Wow.
And so little babies, everyone.
And you managed to do that till date?
Yes, we do, religiously. And that is the one unwritten convention that we have in the family. And so that's a period when everyone's together, everyone's discussing whether it is work, whether it is sport, whether it is entertainment, whether it is Insta, whether it is whatever. What happened at my granddaughter's school. It could be anything and everything. And so that's something that at least I look forward to hugely. And you discuss everything, you express yourself, you get feedback. And the most objective feedback comes from family.
That's true.
And children can be the most critical of their parents. So it's wonderful to get that feedback.
Yeah, that's true. I'm sure you guys look forward to that evening time together. But I also wanted to get a better sense from you. What vision do you have for the group 20 years, 10 years from here on? And I know it's very difficult to foresee that much, but the Goenka Group has, passed the test of time for over 2 centuries because they had the vision and the foresight to be nimble enough, to be agile enough for the next set of challenges. What's your vision for the company 20 years from here on?
I think if you're looking at 20 years, it's Shashwat's call to make, not mine.
I like how there's a clear distinction there. You were asking for freedom, here you have it.
So, but if you're looking at the next 5 years,
Yeah.
I think there's intense growth across all our verticals. And we are not looking to grow incrementally, we are looking to grow exponentially. And every sector, that's the kind of numbers we have, that's the kind of capital expenditure we've committed to. So whether it's PCBL, whether it's power, whether it's entertainment, whether it's chemicals, whether it's IT-enabled services, we're just looking to grow exponentially everywhere. We have the building blocks in place. Now it's for us to go ahead and execute those plans and make sure we get there.
I'll quiz you more on these top lines and bottom line growth, but after a very short break. So let's take a short break and we'll be right back. Welcome back. We're still in conversation with Dr. Goenka as well as Shashwat to talk about us about the way forward for the RPSG Group. So let me start by talking about the flagship company CESC. With the entire energy transition which is underway and the kind of power demand that we are seeing in the country, do you think we're well positioned in terms of the policy action for the power sector to take off from here?
Capacity addition in power doesn't happen overnight.
True.
So you will see huge capacity additions nationally, and particularly in the renewable sector. So you will see capacities, you will see a national grid effectively taking place. Much of it is constructed, some of it is yet to happen. And once you have connectivity and you have generation, then you need to sort out distribution and connect to people's homes. The key reform in power is tariff reform. People need to pay for the quality of power that they consume. And this whole thing of getting subsidized, and I think that is the reform that we as a nation should look towards, because frankly, subsidy is not a solution for anything.
True, but what about privatization? Do you think that is also something which is a fundamental ask for the industry now?
Absolutely, and privatization hopefully will happen. Fingers crossed.
And CESC will be participating in that actively?
Absolutely, very aggressively.
Yes, you have turned around quite a few of them already, so I'm sure that's a par for the course. But the renewable bit that you talked about, there's a tall target that you've set for yourself, 10 gigawatt. What exactly is the timeline of that? What kind of capex you've lined up for that?
Fair. So when we look at the renewable energy business that we're looking to set up, we're currently first targeting to get to the first 3.2 and then build up to the 10 gigawatt. And for the 3.2 gigawatt, we've already made good progress both with wind and solar because we're looking to set up hybrid projects.
Yeah.
And so for solar, for example, we're looking to primarily set up in Rajasthan, where we've already started the process of land acquisition, and we're at various stages for 4,800 acres across the state. And as far as the wind part is concerned, we've done framework agreements with the likes of Suzlon and Inox for already 2.5 gigawatts and some more in the pipeline, and looking at 8 projects across 4 states. So we're looking at Gujarat, MP, AP, Karnataka. So we've got a lot of the groundwork done, I would say, and they're all in different stages of installation. We should kind of start with the commissioning of the first gigawatt from March 26, and 1 gigawatt each year thereafter.
But I also want to talk about the Chandrapur plant because I understand a 230 megawatt PPA with Indian Railways ends. Now, is that a bit of a worrying factor for the investors that the revenue visibility goes away, or is it something that you're looking forward to because then you can probably sell it at a better rate?
Absolutely, a hugely better rate. So therefore, we expect that to be very strongly bottom line accretive. And we expect a significant addition in profits of the Chandrapur project going forward with this PPA lapsing.
And I think that's what analysts are banking on in terms of the ROE accretion as well. I think you've set yourself some target there as well.
So we expect an ROE increase not only from the Chandrapur plant. I mean, now with the government's additional coal availability, the 100 to 120%, we do expect that to benefit Chandrapur as well significantly positively. And overall, when we shift to renewables and we shift 50, 60, 70, 75% of our distribution volumes to green energy, they will come in at lower costs. And so therefore that will either give us higher returns or land up making us more competitive, whichever way.
Interesting. And what about the timeline of the potential IPO of the Greater Noida? You did hint about that at the analyst meet. Give us a few more details as to what the timeline could be.
No, I don't think we really spoke about that.
Okay.
But
is that something likely, let's say, in the future then?
It's not something we've given very serious thought at this point in time, but it's something that's certainly an option. But if we say it's imminent, no, it's not imminent. But we will take our renewable power into our networks in Kolkata, in Noida, as well as in Rajasthan. And Noida will promote some of these projects. CESC will promote some of these projects. And it's something that then in a way becomes very comprehensive. The first 3.2 gigawatts actually goes into our own grid.
Correct.
It's the subsequent ones that will go into the merchant market.
That's interesting. That's about CESC, but I also wanted to talk about PCBL. And there as well, you've set a very tall target, and that says that profitability of 5x over the next 5 years. How exactly are you planning to do that?
You know, very simple, very clear roadblocks in place. We're expanding carbon black capacities by 4 lakh tons, which are all identified. 90,000 tons in additional capacity in a new plant at Tamil Nadu. 150,000 tons in a plant in Andhra Pradesh. 150,000 tons in a plant in Ras Al Khaimah. 30,000 tons in Mundra. So that takes us to 420,000 tons. part of this is going to be specialty, and therefore the margins will be much higher than your rubber blacks. So overall, our weighted contribution will go from 20,000 rupees a ton to 25,000 rupees a ton because of the change in product mix and the additional volumes. So that in itself gives us about 1,200 crores of additional contribution. Then Aquafarm is expanding in all its product lines, in phosphonates, in oil and gas chemicals, in green chelates. And we expect about 700 crores of profitability to come in from those. Then we have this joint venture with the Australian firm called Kinaltek for nanosilica, which goes into the electric battery. And that's a small investment, relatively speaking, but we expect the profits to be huge. So if you look at the composite thing, we are looking at an EBITDA of about 3,800 crores, which translates into a bottom line of 2,500 crores, which is 5 times our existing PAT.
But let me now shift focus and talk about the retail business, because that too has been picking up. What's the turnaround plan for the grocery retail arm for you?
So I think that's a business for us which has had its fair share of challenges, to say the least, right? And I think if you look at it, we were primarily operating in 4 geographies. So the eastern part of the country, then there was UP, there was all of the south, and then there was the NCR region. For us, the south and the NCR region have always been grossly loss-making, right? And everything we have tried hasn't worked for us. And on the contrary, the east and the UP parts of the business have been hugely profitable, right? And this is where we have majority of our scale. So over 80% of revenue comes from these 2 states or these 2 geographies for us. So I think the tough call we've taken is to finally exit from the NCR and the south, and also at the same time look to cement our business in the east and UP. So what's our plan in a way is essentially from a gross margin perspective, we are looking at a 50 basis point improvement in gross margin. We've significantly relooked at our cost structures both at the store level and at the corporate cost level. And with a rejig in that, we should be able to convert store EBITDAs, which were at about 1%, to upwards of 6%. And we should be able to lower corporate costs, which was at about 8.5%, down to 5%. And I think with that, we'll get to profitability. So we're actually, with the kind of math that I just told you, we're expecting the 3rd quarter and 4th quarter of this year to be EBITDA profitable from a first step perspective, and then we'll take it from there.
That's interesting, but the tough call that you have taken of, almost shutting 20% of your revenue grocers, do you plan to replenish it with the kind of store additions that you've planned in the eastern region, or for now it will be a step back, consolidate, and then look for expansion maybe 2 to 3 years out?
I think for now it's definitely going to be a step back, consolidate. All of that has happened. I think now we have to earn the right to grow. And so therefore first turn business EBITDA profitable and then take it forward from there. Having said that, we will still be adding stores in both these regions, but it may not compensate for the loss straight away.
Now, what's been your learning of the retail business? Because that's your chosen kind of medicine, because you had the option perhaps when you started off to look at any business, you gravitated towards retail. You tell me, what has been your learning as to how the Indian consumer thinks, what works, what doesn't work?
So I think one thing that I've definitely realized is one size doesn't fit all. And every region, every city, every neighborhood is extremely different. So retail is a very, very local play, right? And so therefore you don't have to win nationally, you have to win locally and penetrate deeper and become a brand for that consumer.
But what do you make of this entire big tussle from the quick commerce industry as well? Because they are clearly helping you solve a problem which existed. Kids used to be those delivery boys earlier. Now it's, of course, the Zeptos of the world. How do you plan to compete with those?
Sure. So for us, e-commerce is a fair part of our plan going forward as well. And in these 2 geographies, we actually have a fair share of the e-commerce business in the cities we operate. For us today, we obviously don't play in quick commerce where we're delivering in 10, 15 minutes. But I also fundamentally believe that grocery doesn't need to be delivered in 10-15 minutes, right? It's top-ups that usually come in that
fair.
space, right? And if you look at the food delivery business, for example, as well, when Domino's introduced 30-minute delivery, right? So it was one of the players who had it, but not everyone did. So it helps you get the eyeballs and the market share, and there is a market for that. But having said that, in the large scheme of things, it's still small. So when you look at India, traditional retail is still 90%, despite everything that's happened on the Ecom side and despite everything that's happened on the quick commerce side, right? I think the change is between e-commerce and quick commerce. Quick commerce has taken a large share of e-commerce, but when you look at India overall, it's still very kirana store driven, mom and pop store driven.
Yeah, very brick and mortar, and that's been our DNA. We always, kind of want to look, touch, and feel a product before we buy that. But let me talk about something which you can't, kind of touch and feel, but that is something that you internalize a lot more, and that's Saregama and the kind of product that we have been getting through that. How do you plan to deepen the presence when it comes to the video business? I know Avarna looks at it more deeply, but of course, music is something that you guys have sorted out very, nicely for yourself. What about the video side of things? Because that's also very competitive, and people are throwing money at it.
We will definitely look at getting more aggressive with that business or with that segment. So whether it's serials or whether it's films, we will be focusing a lot more on that than we have done in the past. But there, the big potential upside is the music OTT channels turning pay. So as and when they turn pay, a huge amount of revenue gets generated for both the telecom industry and the music industry.
And do you see that happening soon?
I definitely see that happening. Whether it happens in 6 months or 12 months or 18 months, I can't really say. But I see that happening because how long will this whole system of free this, free that, free to air, so you consume IPL free to air, you consume music free to, how long will that carry on? At
I hope forever as a consumer.
I sincerely think that at the end of the day, if the consumer wants a better product,
Fair.
there must be a willingness to pay.
I do agree with that point. But within this entire video content that you're saying you'll be a lot more aggressive towards, any amount that you've earmarked for that, and will it be a lot more regional driven? Because I remember the last conversation I was having with Shashwat, and we were discussing how, regional languages, vernacular is also picking up quite a bit of steam, and not just English or Hindi.
So, well, the biggest, the South Indian industry has become very big for audio and video. Our last film, which was a Malayali film, I can't pronounce the name, I'm sorry, has done extremely well. So we will be there, but we will be present, for example, in Telugu music, but not at this point in time in Telugu films because they're really big budget. And frankly, the sensibilities of each of these states is a little different. So you need to understand it to be able to consistently produce good quality content. And so maybe we might look at the inorganic route, but let's see.
But again, any amount that you've earmarked for CapEx, organic, inorganic, and
it'll depend upon the opportunity that comes, if any come at all.
Okay, but what about perhaps the target that you've set, PBT positive over the next 3 to 4 years and revenue CAGR of 25%, if I have it right?
PBT is already significantly positive.
Okay. Double PBT, I beg your pardon, double PBT 3 to 4 years and revenue CAGR of 25%.
Absolutely, that would happen very normally with this organically. So we are now orienting ourselves to a situation where organic growth is not satisfying us. So we are looking at growth which is beyond the ordinary course of business. So 23% CAGR is something that the music industry will give Saregama. But that's not good enough. That's good, but not good enough. So we have to look at greater growth. And we do hope turning pay will be one option towards building bottom lines. Getting into more video is another way. Getting into regional music is a third way, and we're aggressively doing that. So our old catalog helps us connect with the older age. Pocket Aces helps us connect with the youths. So we have music from Dharma, we have music from Bhansali, we have music from Madak. So these are the three big production houses.
True.
So, you know, all these things are helping us. The biggest hits of this year, Bad News and Stree 2, the audio rights are ours. Last year, they were ours. The year before that, they were ours. So we are learning or relearning the ropes of this business.
But you get the time to catch some of these production of yours?
They're not our productions.
In the sense, you're, okay, do you get a time to kind of watch all of this content, etc.?
I do not necessarily see all the content, but I'm a great movie buff. So I see as many movies as I can.
So which is his favorite movie of all time? Let me put you on the spot there.
Favorite movie of all time? Silsila?
For me,
Yeah?
Kabhi Khushi Kabhi Gum.
Oh wow, it's my favorite as well.
And I guess I got that wrong.
So, I mean, it's on my iPad, and 1 out of every 3 or 4 trips, I
you
watch
keep
that.
watch it again?
Yes.
Wow. It's been a long time that I have watched it, but yes, it's one of those classics that you can be in any mood and you can just still watch it.
And right now, I've watched Rocky or Rani Ki Prem Kahani about 5 times, and I'm happy watching it a 6th.
Are you a big movie buff as well?
Absolutely.
What are your favorites of late? Or are you more of an OTT person?
OTT definitely, but from a movie perspective also, I think for me, growing up, one of the movies that I watched a lot was Hum Aapke Hain Kaun. Yeah.
Another classic.
Yeah, absolutely.
But on that note, we'll wrap up the conversation. Thank you, gentlemen, for making time and speaking with us.
Thank you.